Harold, let's take a look at Meta, up 2.5% in some volume. It's been hugging those converging moving averages and that round number at 300. So talk to us about a potential trade idea here.
Yeah, so like I said at the beginning, I'm going to be doing a bull put spread on Meta. That is a bullish option strategy, and you just said it. The convergence of the moving averages, that's a good support area. That round number of 300, that's also a good area. So that was my reasoning behind this trade here. So let me get my platform set up here. Whoops.
Sounds
Oh,
good.
you know what?
And yep.
I think I
Do we need to
processed
circle
the
back?
trade.
You went ahead and did it.
Yeah, yeah, I already processed it, but we can go through it. We can go through with it. Um,
Here's the price that I got.
Great.
yeah, yeah, yeah. So
Ah,
I got the price that I wanted, so that's a good sign. So yeah, we'll just go through the trade here. Let me get
perfect.
back to. So I'm gonna share my screen here.
Sounds good. Yes, he's going to be opening up Thinkorswim from TD Ameritrade. We've got the trade setup here in the simulated trading platform. And first, we have to figure out what expiration we're going with.
Yeah, so I try to go out anywhere between 45 to 60 days. 45 days, that's the sweet spot. So in this case, I'm going to go out to the 39-day expiration. So that's the October 20. So I'm going to click on that to expand it. And then I'm going to start by selling the 295 put here. So we got puts on this side, calls on this side. I'm going to sell the 295, and then I'm gonna buy the 290 for protection there. So that's gonna give me a credit of, you can see, $1.67. I got filled at $1.60, so I'm gonna lower that number there. Oops, wrong direction. So $1.60. So that's a pretty decent credit here. So we're $5 wide here. Now let's take a look at the numbers. I'm gonna click on confirm and send. And so there's our max profit at 60 or $160. I always take a look at the break even, 293.40. I'm going to be using that as my stop loss. So you may want to write that down. I'm going to write that down, 293.40 as my stop loss, and then the other numbers. So now I like what the number, I like what I see here. Now I want to see what is our probability of success and how many contracts we're going to buy, how much money we're going to put into this trade here. So I'm going to click on edit here, and I've got some notes here on the left side here. All right, so first we're going to calculate the probability of success. It's a two-step process. First thing we need to do is calculate what is our actual risk in the trade. To determine that, we take the width of the spread, which is $5. So you can see the difference between 295 and 290. So $5 is the width of the spread minus the credit received, which is $1.60. That's going to give us the actual risk of $3.40, or in option terms, we always multiply by 100, $340. So that's our actual risk in this trade. Now, determine what the probability of success is. We take the actual risk in the trade, which is $340 divided by 5, and multiply by 100. That gives us a probability of success of 68%, which is pretty good. I like to get around 70% or higher. Now, based on that, how many contracts we're gonna buy? Oh, first off, let's look at the return on risk. So our return on risk, to determine that, we take the credit received, which is $1.60, divided by our actual risk, which is $3.40, multiplied by 100, and that gives us a 47.06% return on the amount of monies we're risking, which is not bad for a 39-day period. Okay, how many contracts? So we determined that, okay, we're going to put $2,500 into this trade. Again, that's based on your account size, your level of risk, etc. So $2,500 is what we're going to put up. So the number of contracts, take that $2,500 divided by the actual risk, which is $340. That gives us 7.35 as contract, or seven contracts. So I'm going to change the number here to 7. Oops, wrong direction. And then how do we manage this trade? What are we going to do with it? So first off, remember that, what was it, 293.40? That's our break even. So I'm going to use that as our stop loss here. And then how are we going to, if the trade is profitable, we're going to take 50% of the credit received. So in this case, that's 80 cents. And then we're going to manage the trade at 21 days to expiration. So I'm going to be looking at this number here when we get down to 21 days. So let's just say, hey, I don't have my profit yet. I haven't hit my stop loss. What am I going to do? If let's say I have it, maybe I'm only 40% profitable. I might say, okay, I'm going to take the money and run, or maybe I'm down on a trade. I'm gonna roll it out to a later expiration to buy some time. So that 21 days to expiration, that is key there. So let's take a look at the numbers. So we're going to use 7 contracts, and I'm gonna click on confirm and send. We're going to look at the numbers again. So our max profit, that's based on the 7 contracts. And then there's the amount of monies we're putting up. That's close you can get to that $2,500. If I wanted to get closer, I could increase the number of contracts. And then, like I said, I already sent this off. So it filled here in the simulated, also filled in my my real trading account. There we are, full put spread on Meta.
So Harold, it's nice actually that you are already made the trade, because we can see those little flags on there
Oh,
where
yeah.
it says where your position is. We have a
Right.
question from Lee asking, okay, so once I've submitted the trade, how do I check in on how my trade is doing?
Well, I check in. So first thing I'm looking at is the profitability. So I'm going to delete this, and I'm going to close the left side here, and I'm going to go to my monitor here. And so here's Meta. And I don't know why, but my P&L never shows up here. So I'll be taking a look at the P&L. Let me just add it real quick here. Uh, and move it up. And for some reason, this won't stay on the platform. So far the trade it's down here. So right off the bat, we're down, but I've got 39 days for this trade to work out. So I'll be keeping an eye out first on the how much money I'm making into this trade here. So I'll keep an eye on that. And then also, as I mentioned earlier, the days for expiration. If I'm down 6% and we're 21 days expiration, I might just say, okay, trade's not working. I'm going to close it out, takes a 6% loss, or I can see if I can roll it out to a later time. When you roll, ideally, you want to roll for a credit and not a debit. Debit, I will roll for a debit if it's a small debit, maybe 5 cents, 3 cents, but ideally, you want to roll for a credit there.
Mm-hmm.
So,
And just a point to make sure that people understand is you're not using a 7% stop loss or 7% or 8% stop loss on
Right.
options. I mean, they're a
right,
lot more volatile. So yeah, when you
right.
say 20%, that's pretty typical. 20% or more that you're giving the room on here. I want to add one thing that I do sometimes is sometimes from here I'll put in a closing trade. So I'll kind of put in my stop loss, and what that'll do is it'll kind of give me a price for what the spread is at. So once I kind of have that closing trade in there, and again, I usually will put it much much lower, and that just kind of gives me a sense. I mean, you can calculate it here by going with the mark, and just doing a 8.5 to minus 6.85, but by having that trade kind of working, it will give me that mark. It'll do that subtraction for me. So that's one of the things I do to kind of get a sense of, okay, what profit level am I at? Because a lot of times, as you said, you take profit at 50% or something like that. It'll kind of let me know when I'm at that level. I'll have that kind of marked.
Yeah, and as Justin mentioned, options can be a lot more volatile. If you've been watching this number,
Yeah.
just as he was speaking, we start out at minus
Up
6%. It went up
9%.
to 9%. Now we're
Yeah.
at minus 3%. So that's why you give options a little bit more wiggle room. That's why I use that break even as my stop loss. If you really want to be conservative, you can use the 10-week or the 50-day as a level. I might be doing that. We're above the 50-day moving average. Let's say we start trading below the 50-day. I might say, okay, you know what? I've got, I only have, I thought I had 7 here, but anyway, I might go back and execute some more contracts here. But let's say I had the 7 contracts were below the 50-day. I might take a little bit off the table because the trade is just not working. Maybe I'll take off 3 or 4 contracts, see how the rest of it works. I would do the same thing if I actually bought the shares of it. So how I manage it is not much different than if I just actually bought the share. So that's one of the things I try to do is put an option trade that not only can you place an option on it, but if you don't want to do options, just trade the shares of the stock.
Yeah,
You know, one
definitely.
other question for you, Harold. You know, you mentioned that 21 days till expiration is kind of a line in the sand. This is a credit spread. Do you have a different days to expiration line in the sand for the debit spreads?
No, I do that 21 days expiration. I use that same thing for whether it's a credit spread, debit spread, iron condor. Those are the 3 basic trades that I do. So that 21 days expiration, that's pretty much standard for what I do with my trades here.
Gotcha.
Great. Thanks, guys. And now I'm going to take back over the screen share to show where that break even roughly is on the chart, around 293. And so if we did get a close below that level, that seems like a logical area for a stock trade, Harold, to see
Yeah.
that, hey, maybe this needs more time to rest.
Yeah, yeah. And here's another frustrating thing about options. You see, the stock is up almost $7, but we saw that the option trade was down a little bit. So that's just the nature of options. And we saw that volatility; things could turn around easily. So that's something I have to deal with as an option trader.